I think it's hard for women. I think, in a lot of ways, the cards are stacked against them overall. And I think there need to be more women raising big funds, more women getting out there. I think a lot of it is just really under the radar, right? When you go out to meet an LP, let's assume the first thing he's doing is pattern matching. He's looking at you versus the things in his or her portfolio that worked in the past. It's not intentional. It's not, oh, you're female. It's just you don't look or act like the other things in my portfolio that have done really well for me. And I think that's really hard.
I'm Ethan Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Keri Findley, who's Chief Executive Officer of Tacora Capital, which focuses on asset-backed and private credit opportunities in specialty finance and insurance. She was previously a partner at Third Point. Welcome, Keri. Thanks for joining me today.
Thank you. Thank you for having me.
Well, let's start with your background and career journey. Can you talk about where you grew up, your early interests, and how you came to enter the world of investing and finance?
I mean, it was totally by accident, but I grew up in LA. My dad is a CPA. My mom was a homemaker. And my first early interest was figure skating. I fell in love with it at an early age and did it really until I went to college. I think I was a pretty normal kid, good at math, not great at writing, really bad at foreign language, and got into engineering school at Columbia and really loved math and really loved science. I tried to kind of figure out what a career would be. And, as a young woman, they always tell you you're going to be a doctor. You're good at math, you're going to be a doctor. Well, then you go to splice the fetal pig and you faint. And all of a sudden it's, well, you're not going to be a doctor, but we'll figure out something that women who are good at math can do. And so I went to college in engineering. And when I was going to graduate, I applied to every job on the Columbia job. I didn't know what I wanted to do. So I figured I'm just going to go to the one where I like the people the best. And I ended up in something called ABS CDO research at Morgan Stanley for my first job. And I absolutely loved it. And it was really interesting because I took one class in college that I didn't even know was a finance class. It was called stochastic calculus. And stochastic calculus is really calculating things like random walks and simulation and Brownian motion. And then 6 months into my job at Morgan Stanley, I'm sitting there calculating a loan transition matrix. And a loan transition matrix is the people who are currently paying on their loan and are current on their loan, and then the people who default, and how you get from paying to default and all the different paths. And I was like, oh my God, this is the class in stochastic calculus. It's really crazy how you can sometimes just randomly end up in the one class that you really loved in college. And somehow I found my way there. And maybe it was the people that interviewed me knew that I liked that class. Maybe I mentioned it or maybe I didn't. And it just randomly ended up that way. So I got into finance kind of by accident and had no idea if I would like it or not and kind of thought I'd go to business school. And then those things never really happened. Growing up, I spent probably upwards of 40 hours a week figure skating. And then when I got to college, I switched that to ski racing. And the ski racing thing was totally accidental. With figure skating, all that matters is how light you are and what your muscle and strength to your weight ratio is. And so, today they wouldn't have you do arm exercises because you don't want any more muscle than your legs need to jump. But as you get to college and you start to have fun and go to parties, it becomes harder and harder to jump. And so I switched to ski racing. I met this kid, Ethan, on the subway, and he was like, oh, you're that girl who figure skates. You should try out for ski racing. I think they're pretty similar. And they actually were. And I had a blast. And it wasn't a very serious team. It was club, but it was one of the more fun things I've done in my life.
And was that a 40-hour week commitment to ski racing, or was this less now because you were in a club at college?
It was definitely 40 hours, but it wasn't 40 hours of training. So we went Wednesday at 1 p.m. and we're there till 10 or 11. We went Friday mornings when we didn't have class and we're there all day. And then it was all day Saturday and Sunday. But that was 40 hours. But let's say half of it was fun and half of it was transportation. And so we probably skied 15 to 20 hours a week, but it was more fun than it was skiing.
Before we go back to the professional world, I always love to ask someone who's played sports at that level. When you arrived at college and had that history of figure skating in your background, how did that shape your approach to study and later your approach to the professional world?
Yeah, I think that skating teaches you perseverance because you may work on the same jump for 4 or 6 months before you actually land it for the first time. And so it teaches you that you can keep working on something. You're not going to get there, but you will eventually get there. And you might not have gotten there the first month or the second month or the third month, but sometime if you keep working hard enough, you do eventually land the jump. And then you land it once and then you don't land it again for another 6 weeks. And then you land it a second time. And then maybe at some point you land it every day. I think that's the most important lesson. I mean, the really obvious one is get up with a smile on your face when you fall. Falling is part of the process. Falling is okay. You just have to get up and keep going. And so I think both of those are the two biggest lessons. The perseverance one is the one that I think is the hardest to teach in other parts of life because it feels like you may just never get there. And I remember being really down about a jump, coming home every day, and you just have to stick to the process and you have to stick to what you know works and just keep trying every day. You'd have to force yourself to try 30 a day, to try 40 a day, but you want to do 30 or 40 good tries a day, not 30 or 40 mediocre tries because you're disheartened and tired. You have to find a way to give it like a certain amount of shots. And eventually, through conditioning and hard work and jumping a little higher and spinning a little quicker and getting your snap to work, you will eventually land the jump if you just keep trying.
And two very quick questions more about this kind of a childhood passion, because this is increasingly common now, whether it's gymnastics or other sports, that they take up huge amounts of time. Looking back now that you no longer do this, any regrets, or are you pleased that this took up so much of your time given the level you got to and what it taught you?
I'm so thankful I did it. I don't regret one day of it. When you love something, you find the time. And at the time, one of the things I'm really happy about are that I didn't give up school for it, because when I was 13 or 14, if you had given me the choice, I would have said, I don't need to go to school. I'm just going to skate. And I am, so thankful that that didn't happen. The other thing I'm very thankful about is that my parents really pushed college and how important that was and how important that was to them and for me. When I look back at most of my friends who skated, they are coaches today. And I think that's obviously a really important profession and really important skill, but it's just not what I would have wanted to do. But as a teenager, I don't think I understood that. So having kind of very on top of it parents was really important to me, because I probably would be a figure skating coach today and probably would not have gone to college if it wasn't so important to my parents and also the environment they put me in. I went to a very competitive school in Los Angeles where getting into a good college is a sign of pride, but also something that everybody else around me was trying to achieve. If I wasn't in that situation, I would have had the same drive to work hard and get there. When I was applying to college, I wasn't one of the ones who should have made it. I was very good at math, very good, but I was not great at the other languages. So my grades, I didn't have a 4.0. I wasn't getting academic honors. I think especially back then, being really good at one thing kind of wasn't what everyone wanted. Everyone wanted to be well-rounded, have straight A's. And I just didn't have kind of the right makeup to get there in every class. And so I don't think I was one that people would have said, oh, she's going to go into finance and do really well at it, or she's going to go to this Ivy League school, because I just didn't have what other people were kind of looking for and looking towards as the North Star.
Oh, one last question on figure skating, because not often I get an expert. And this is one of the sports that seems to be pushing through boundaries right now in terms of technical prowess. We've seen quadruple jumps being executed. What is happening in terms of innovation? And I suppose, what do you see there in terms of breaking boundaries or limits more generally?
So I've heard the skates are a little bit better these days. I've heard there's been a lot of technological innovation in the skates, but I also think in the US, I think we're a little farther behind. We have had women land quadruple jumps and it's been incredible, but I think it's training smarter, training with a little bit more science behind it. I mean, when I was a kid, we used to just throw ourselves up into the air and try and turn. Now, I think there's a lot more behind how they're training and how they're getting especially young women, to be able to do 4 jumps. In Russia, they're the ones who are breaking ground, and they're the ones who have, I think they have 15 women, maybe more, who can do quadruple jumps. We just don't have that here yet. But I think once one person does it, then the other kids are inspired and try to do it and work really hard at it and know it's possible. Because when I was 15 years old, nobody thought a woman doing a quadruple jump was possible. And then once your friends are doing it, you're going to do everything you can. And the kids in the rink are doing it. You're going to do everything you can to get there and everything you can. And you might surprise yourself and you might be able to land it too. But I think a lot of it has to do with just the unbelievable focus and hard work that the Russian girls put in to show it was possible. And now we're starting to see young women in the US follow along and be able to have some of them land quadruple jumps as well.
So going back now to breaking boundaries and surprises, perhaps, or surprising turns in your career. So take us from that initial real life case study of stochastic modeling through the rest of your career, right through to Tacora. Any surprising turns in there?
For sure. So I was in ABS CDO research, about a year into my time at Morgan Stanley. Morgan Stanley started deprioritizing research and they moved me to sales, and I wasn't very good at it. When a client would yell at me, I just didn't have the confidence at 22 years old to get back up and call them again. And it was a really hard, let's call it first/second job, to be in a situation where the clients are screaming at you all the time. They didn't get the allocation they wanted. They didn't get this. And your job is just to take it. It's really hard for a young woman. It's probably hard for any young person. And I wasn't great at it. And so from the second I was in sales, it was trying to figure out what I was going to do next. And I was not ranked very highly when I was in sales. And this one VP said to me, she's like, Keri, people who aren't doing well here, they go on to have good careers, just not in finance. And I think a little bit of that gave me the push to focus on, okay, I am going to do this in finance. Just because I'm not good at sales doesn't mean that I'm not good at what I did before and what I'll do next. So I ended up going to a client of the firm. It was called DB Swern, and worked for kind of the two best guys I could have imagined. Their names were Rob Flowers and Ray Chan. And getting to work for smart, articulate, thoughtful, kind, and really ethical people kind of shaped probably the next 15 years of my life. I got to see who I wanted to be. I got to see who I wanted to be as a leader. I got to see how I wanted to be as a lender. And I got to see how I wanted to treat people and navigate tough situations. And most of the time I was at DB Swern, it was not a cakewalk. The firm was undergoing issues. There was this article that said that the founder had bought a jet with investor money accidentally. And when I was 24, I didn't really know what was happening. But through that, I worked for two guys who really made it very clear to me of what and who I wanted to be. And I think that was very surprising to get that at such a young age. DB Swern started going out of business. They were trying to find a place for the whole team. It was during the financial crisis. That was a really hard time. But I got to see how to underwrite. I got to see how to make a loan. I got to see how to evaluate an investment. And I got to see it all through the eyes of two guys who had done it for a really long time. One of them a lot longer than the other because he was much older. And to look at what an elder statesman in the industry really looked like. And that was Rob. And then Ray was kind of coming up in his career. He was probably 10 years older than me and had seen a lot more. But I watched how he learned from Rob. And then I watched how I wanted to learn from both of them. And when the firm was having issues and some of the deals that we were working on, we didn't have the capital for. And watching Ray have those hard conversations with borrowers and the way he spoke about it and the way he treated the borrower with empathy and treated the partner with empathy, but also telling him kind of where they were and what the situation was, I always just remembered that that was how I wanted to treat people. And that was how I wanted to act in those situations. From there, I was looking for a job as the firm was going out of business, kind of in parallel to, as I said, Rob and Ray trying to keep the team together. And I was offered a job to start and run the structured credit business at Third Point. I was 25 years old and I really had no idea what I was doing. I remember getting the offer and Dan Loeb telling me that age adjusted, I was the best person he had met for the job. And he offered me the job and said, we're going to pay you, minimal salary. You'll make most of your money here in bonus. And if you do well here, you'll make more money than you could have ever imagined. And if you do poorly here, you won't be here very long. And so from the minute I got there, I mean, I went home, I think, and cried because I was like, I can't do this. I'm not capable. I have no depth of knowledge to fall back on. But I figured it out. And that was pretty crazy. I went to a firm that had no experience in what I was doing. It was in the middle of the financial crisis. And I also didn't really think I knew what I was doing, but somehow I at least gave off the impression that I did. But I kind of figured it out as I went. And I was writing a business school essay at the time, just in case I had to go to business school, keeping track of the good, the bad, what I did, the good decisions I made, the bad decisions I made. And a lot of the reason I did that was I wanted to learn from them, but I also knew this probably wasn't going to work out. And I was going to go to business school at the end with a really great story of how I got this job as a portfolio manager in my mid-20s.
I love that. First of all, that's probably the best possible sort of set of alternatives you could have as a 25-year-old in terms of either you'll make a lot of money or it'll go nowhere, because in a way you can afford to make those trade-offs at that age as opposed to maybe later in life. So that's pretty interesting. And I think it's really also interesting. And maybe it was the business school application in the back of your mind, but often we do meet some extraordinary leaders in the early parts of our career, but we don't know it then at the time. I don't know if you knew it at the time. You mentioned the mentors and DB Swerin and the leadership they exemplified. I had a similar experience in my own career, but you don't know it at the time until you've seen sometimes less good examples later. But did you think you knew it at the time? Were you aware that you were soaking up this mentorship?
I mean, not really. I mean, I think you're right. I could say to myself at that time, when I'm in this situation, where we don't have the capital, where the firm is going out of business, I want to remember what Ray is saying because I want to parrot that back one day. But I think it took a lot more kind of time and meeting different people, maybe, with qualities I didn't want to emulate, that really made me thankful that I did have Ray and Rob in those early years. I think you're totally right that at that age, you just don't have the worldliness to understand. I mean, I was incredibly naive. I look back at how naive I was all the time. But I remember soaking it up and saying, when I have this problem, I want to handle it in the exact way Ray Chan did. And then you go from there and you see how other people handle it. And you're like, okay, I still want to handle it in the way Ray Chan did. But no, I didn't know the effect he would have on my life at that time. And I'm lucky to say we're still friends and I still consider him a mentor to this day. I think I talked to him last week. I mean, he still just handles things with absolute class and knows how to manage a situation the way I just don't think naturally I would have come to without seeing him as an example.
Wonderful. Well, let's go back to the third point. So clearly those tears, the initial day, not knowing if you knew what you're doing, things worked out on the positive side.
Yeah, I mean, look, I was there for, I think, 8 and change years. I became a partner there. I made billions of dollars for investors. I'm incredibly proud of what I did there. I found a way to switch careers and industries. When I was first there, I was buying residential mortgage-backed securities, commercial mortgage-backed securities, CLOs, CDOs. And I thought that that was going to be a one and done trade. And then I saw an opportunity in Western Europe and found similar deals on a lag because Western Europe was recovering from the financial crisis at a much slower rate. And so we started adding risk in Spain and Portugal and France, Italy, Germany, the UK. And so I was like, okay, this will be a 2-trick pony. And then I found this really interesting opportunity through a colleague in Mexico. And he and I started what's the equivalent of a mortgage REIT. It was called the PFIC in Mexico. And they were buying mortgage loans. And then I started buying non-performing or reperforming mortgage loans and securitizing them. And then at some point, I met this company called SoFi. And SoFi was originating student loans at the time to students who went to top tier schools or students who had graduated from top tier schools, actually. And we were trying to figure out how to do business with them. And so we set up a securitization facility to help them get off the ground. We also invested in the equity. And we looked at every other consumer lender out there, residential real estate lender out there, fix and flip lender out there, all in this venture community. And it really helped me to figure out how to kind of be a lender in this new era and new community. And I think that I was probably one of the first with our partners at a large family office to do these venture-backed loans. And we were traveling around the country, heading out to San Francisco all the time, meeting these companies. And, that was an opportunity I never thought would come my way and never thought we could do. And I think that was one of the things that was one of the most pivotal moments was meeting all these venture capitalists, and they all had dreams and they all talked about the way they were going to change the world. And I saw a lot of opportunity to partner with them and to be able to do business with them and come to a place where we supported their business, they supported our business. And so much capital was heading into the venture ecosystem that it really became this really symbiotic relationship that really worked for both sides. And look, there are some people who think the venture capitalist is getting the better part of the deal. There's some people who think we're getting the better part of the deal. At the end of the day, I think it works for both, and it works for the company. But if you were starting a specialty finance business in 2006, you probably would have gone to a Landis Bank, a prop desk. You would have cobbled together the operating and working capital together. And then as the financial crisis affected the prop desks, a lot of these same entrepreneurs went to the venture capitalists for operating capital, but didn't have the balance sheet capital. And so we had a real place in shaping that market. So I was at Third Point for 8 years, really transitioned into this venture-backed ecosystem, and then left and tried to figure out how and what to do on my own.
And just a quick note on that. So if you could just give us the time period, because that's, I think, relevant. So it did bridge the financial crisis this time.
Yeah, it was 2009 to 2017 that I was at Third Point.
So just kind of the aftermath of that. And then it's interesting, the venture-backed lending, because sometimes the disconnect between the dreams of the venture player and the focus on getting repaid of the lender or the credit investor, they do not sync well together. I always wonder whether somebody who puts 40 hours a week into figure skating and has a dream has a greater affinity perhaps for those who have their business dreams as well. I'm sure there's some kind of a psychological allegiance there. Let's move on then to other dreams and starting Tacora and going out on your own. And what was the vision for that? And what's your focus today?
Yeah, so I didn't want to go out on my own. I spent a lot of time hanging out with venture capitalists, thinking maybe I wanted to be a venture capitalist, thinking maybe I wanted to start a fund with venture capitalists on the credit side. I kind of came to the idea. I knew that was where I saw the opportunity. We don't do venture debt. I didn't do venture debt at Third Point, and Tacora doesn't do venture debt now. I look at what we do as new age structured credit. So it's really the assets are the same as the bonds I bought at Third Point. The assets are the same as the loans we did at Third Point. But I really saw an opportunity as venture capitalists have gotten into new industries. So let's say venture capitalists 10, 15 years ago were almost funding exclusively software. Now they fund businesses in insurance, in financial services, and in real estate. And a lot of those businesses have assets. Those assets may be a loan, a lease, a payment, a purchase order, an invoice. It might be statutory capital. And I just continued to see this world as just very nascent and needed and could benefit from a structured credit or asset-based solution. So my year off, I spent a lot of time with venture capital firms, got to see what they were doing. Some of them at the end of the year wanted me to be a venture partner. Some wanted to start a credit fund. I really didn't want to do it on my own. I wanted to partner, again, go back to this imposter syndrome. I just didn't think I could. And so I had, kind of some fits and starts with figuring out what I wanted to do and who I wanted to do it with. But at the end of the day, in 2021, I was having dinner at Peter Thiel's house, and he said he wanted to help me start Tacora and be Tacora's biggest investor. And that was when I kind of said to myself again, okay, I guess I'm going to do this. But when I was looking at starting a credit fund with the venture firms, it was one of these things where you're talking to a company that's backed by a competitive venture firm, and they don't want you to have their data. And it creates all these weird conflicts of interest in these companies that you probably can't fund because they're backed by a competitor. And you realize that the only way to do it is to be independent. I didn't think that was the case for a while. I thought it would be better for sourcing. Well, you're inside a venture firm, and if they don't like the company, maybe they hand it off to you or vice versa. I just don't think the world's that simple. And I don't really think that's how it works. I think there's complications and there's competition and other reasons that, just for example, a firm that's backed by Sequoia doesn't want Andreessen Horowitz having all their data and information. So at the end of the day, I've kind of realized the best way to start this was to do it on my own. It was a hard and long journey and a lot of self-discovery. But 6 years later, 7 years later, here we are. And Tacora is, let's say, 70% through the investing capital of Fund One. But starting off on my own was never the goal. I spent a lot of time with partners and potential partnerships that either weren't going to be the right fit or didn't work out because of other conflicts that took some time along the way.
And I suppose not to diminish that you have built this alone. Often we're never truly alone in that we have backers or mentors or other words of wisdom. What would you say that you took on board? And certainly someone like Peter Thiel, I'm sure, is not short of a few lessons learned and words of wisdom of his own. Any advice that you got at the startup that you think stood you in good stead?
I mean, he's just so amazing and so intelligent and so thoughtful. Whenever I spend time with him, I always learn more than I ever could have imagined. But on this, he's given me advice when I've asked. He's helped with investors. He's helped give us credibility. I couldn't be more grateful and thankful for him. But he's kind of left me alone. I would say that I've spent more time making sure I had the right team. I mean, finding a COO to do the things that I had always kind of wanted the partner to do was really hard. Finding someone who had the experience, finding someone who wanted to join a startup, but also had the experience to do it was a long roll. Even with the start of Tacora, at first, I was planning on using the back office of an already semi-established fund because it was not something I ever dealt with at Third Point. It was not something I ever dealt with in my previous jobs. And I was just so nervous of screwing this up for the investors because, you're in a situation where I know I can invest. I'm confident that more times than not, my investments will end up in a good place. But if you screw up the back office, you're out of business before you even start. And we found this great guy named Jonathan Marmolejos, but it took me time. And I actually found him through the firm, which was called Hill Country, that early on I had thought would do our back office. And so after Peter Thiel and I agreed on what Tacora was going to look like, I was planning on setting up a services agreement with a firm in Texas called Hill Country. And through some fits and starts, Hill Country decided to wind down, and I was kind of in the same place again. And the president of Hill Country introduced me to a COO that he had worked with previously at another fund called Rock Capital. And we hired him, and he knows what he's doing, and he makes that side of the house run smoothly. And it's been a lot easier since we found him.
And let's talk about then the subject matter of what you invest in. What is your focus? You said it's not venture debt. And also maybe if you can comment on the market backdrop for this kind of investing today.
Yeah, so I view it, I call it two things. One is new age structured credit. The other is asset-based lending to venture-backed businesses. So we look for venture-backed businesses that have a harder financial asset that they want to optimize by taking off their balance sheet. So a loan, a lease, an invoice, a purchase order, statutory capital, equipment, those are all things that we lend against. I would say that there are other assets that some of our competitors look at that we don't, but what we do is really narrow. And the way to think about it is you have a company, the company's doing something like selling software to landlords, and they're spending like $3,500 every time they acquire a new landlord. It means their marketing expense is high and their cost of acquisition of their customers high. And they're looking at their customer set, and one day they wake up and they realize that the best way to upsell the landlord on products is to sell them a financial service or insurance product. In the case of the deal that we did, it's an insurance product. And they're looking to offer landlord liability insurance. And we can help them stand up that insurance product. If they were just going to say in software for landlords, there would be nothing for us to do. But once they realize that they want to be in some sort of financial services or insurance, we can do much better. The market backdrop over the last 2 years has really kind of been very favorable. So when we first started Tacora, year one was 2022. And I would say that the overhang from the funding cycle of 2020 and 2021, where startups were able to raise, let's say, by all means, it seemed like infinite amounts of money, even though I'm sure I didn't feel that way. There wasn't a lot for us to do. Companies were well funded and we charge a lot. We're not a cheap solution. And we also have a lot of requirements. They probably need a capital markets person or CFO. They need to report every month. They have to do borrowing-based calculations. And it's a complicated facility to take out. So the first year was tough. We got almost nothing done. And then 2023 happened. I would say that funding in the venture ecosystem went down a lot, which meant that venture-backed businesses were looking for capital. And then I think that SVB going out of business in March of 2023, when that happened, the floodgates opened. And so in 2022, we were probably doing every deal that we liked. By the end of 2023, the average was that we were doing 1 in 4 deals that we liked. And in 2024, we're doing something around 1 out of 10. The market backdrop has just gotten more and more favorable. And I don't know if that'll continue. My cynic would say that if funding is hard, less companies will get started. And so we could see less companies. But I also know that the product is very needed right now, and there just aren't a lot of people providing it.
And then moving to the client side or your potential LP side. So this would just be categorized into other asset-backed lending, opportunistic credit type of a bucket, I suppose. Do you find that the sophistication of LPs is changing, that they're getting more discerning, I suppose, as to what asset-backed lending should look like, what it looks like? How do you think that side of things has evolved?
Yeah, I think over time, LPs are definitely getting more educated. That's great because what we do is a little differentiated. But when I first left Third Point and was talking about this idea, most firms didn't even have private credit buckets. And obviously that's evolved. But for a small fund like us, we need the big guys to pave the way. They have infinite marketing dollars. They can have as many salespeople educating. In our education process, it's 2 of us that are out there marketing. And so the amount of education is a lot, but if they've already met some of the bigger fish, it means we need to educate a little bit less, which is we're always happy to do it and always want to teach people about what we're doing. But it definitely has been easier now that the $100 billion funds went out first with private credit and now with asset-based lending funds. Everyone views asset-based lending as different. We go to some people and they think we're going to be doing equipment finance. And we go to other people and they think it's going to be something else. They think it's going to be buildings, real assets, minerals. I mean, it's just a whole range of what asset-based lending can be. There are a lot of different assets, and we focus mostly on financial assets, which I think is still a more nascent part of the ecosystem and still takes a lot of education. Actually, if we go back to Ray Chan for a minute, he kind of works at the firm. He was my boss at DB Zwirn. He works for the firm that's paved the way. He's a partner at a firm called Atalaya, and they, I think, are over a $10 billion firm at this point. And they are educating and paving the way for, I would say smaller guys like us to kind of come in, and at least the LPs having gotten a tutorial on it and then done their own research and learning, it's really helped us to kind of have an initial meeting with an LP go a little bit smoother.
That's interesting that the demand supply backdrop has changed given SVB's demise and just the change in the infrastructure there. How about the lack of defaults? Do you find that some that we're seeing so far, it's the most resilient economy that I think we could imagine seeing coming out of COVID, et cetera? Do you think that some of these asset classes have been sufficiently tested, or are they sufficiently robust? Do you think they've seen the kind of defaults that are reasonably to be expected?
I mean, we see defaults. We expect 30% of our companies to default. We just hope and work to lend in a responsible way where when they default, we collect. We have, I would say, 3 defaulted loans in our portfolio right now, a 4th that's on high watch list. And I'm not worried about getting all of our money back plus interest in any of them. One's on a payment plan, one's fully repaid. One is we've collected about 90% of our money back and expect to get the other 10% back next month. And the one that's high watch list, we'll see. We're really on top of it. But we see a lot of defaults. So I understand the private credit world as a whole has seen low defaults. I mean, I do think that will change. I think that as interest rates go up, as larger companies have other debt they have to refinance, it's just going to get harder. And then I do think we're going to see dispersion in industries over time. If you go back to something like 2015, the energy industry was having a very tough time making their loan payments. I don't know which industry will be affected first. And then, during COVID, it was the transportation industries. But I don't know which industry will be affected next. But I think we'll see more dispersion among industries than we've seen in the last handful of years.
And then just one question that I'd like to ask, because of some of the focus of this podcast series is around diversity. So you mentioned people thought that you should be a doctor. That was, of course, your career. This is maybe not a traditional career path. Now that you've become established in finance and set up your own firm,
Any comments on the diversity of the industry, whether you think your fundraising experience was any different, just anything on the diversity of the industry that you can comment on?
I mean, it's not. There's no diversity. It's very sad to me. For most of the time I was at Third Point, I was the only female investment professional. I hired a young woman to work with me, but that was it. And yeah, I mean, I wasn't always invited to the golf outings. I wasn't always invited to events. There was one large bank that had their annual golf outing for all their clients at a place where women couldn't eat dinner with the men. And so I had to eat lunch and dinner in this room called the Birdcage. And those things are really tough. I was young, I was in my 20s, and all these people are telling you that you're the problem for bringing it up. And I don't know, I just never saw it that way. I don't see it that way. I think it's hard for women. I think, in a lot of ways, the cards are stacked against them overall. And I think there need to be more women raising big funds, more women getting out there. I think a lot of it is just really under the radar, right? When you go out to meet an LP, let's assume the first thing he's doing is pattern matching. He's looking at you versus the things in his or her portfolio that worked in the past. It's not intentional. It's not, oh, you're female. It's just you don't look or act like the other things in my portfolio that have done really well for me. And I think that's really hard. And I think that it's a little bit of an illusion to think that, oh, because I'm female and because I'm different, people are going to want to invest with me. It hasn't seemed or felt that way. And I actually think that my experience in my career and now has been that there's just different standards and there's just different metrics that you are put up against. And sometimes you don't meet them, but it's not that the guys met them either. It's that they just weren't put under the same, I would call it microscope. I don't think it's easy. I hope more women do it. I want to be supportive of all of them. When a young woman comes to me and is starting a fund, especially if they're in network, I always invest in it. I shouldn't say that too loudly because a lot of people on this podcast, I wouldn't have enough money to invest in all of them. But I think it's important to me, and it's important to mentor young women. I'd say the best moment in my career, I was at a golf event at Hudson National. It was a women's golf event put on by an investment bank. And someone at the table said to someone else at the table, how'd you get your job? And they said, Keri introduced me. And then someone else at the table said, Keri introduced me to my job too. And then someone else said the same thing. And I didn't even realize it, but every woman at that table had been introduced to their current job by me. And it's a very grassroots effort. There's no real systematic way to do it. But I think if you can't help the young women behind you, what else was this good for? And so I find those things really important, and I don't think it's easy, and I don't think it's purposeful. But even just last week, I was hearing about this foundation that has to, or is goal to invest in 25 female managers by 2025, but they won't talk to us because our biggest backer is someone they don't like. And it's like, you can always find an excuse to not invest in someone. Like, that's totally fine. I don't expect everyone to want to invest in us. But it's just so funny that I do think, yes, we want to invest in women, but we don't want this woman or that woman. It still seems to be a hard hill to climb.
Absolutely. And we talk about glass ceilings, glass cliffs, and now I have an image of this glass bird cage, which I'm sure we could go far with that analogy.
My last question, wood, not glass, but yes.
Yes, maybe it's very obvious that we sit in the bird cage very often. My last question, because this has been a wonderfully rich discussion, we've already touched on many of the usual reflection questions around people and experiences that have influenced you, is just around any word of wisdom or creed or motto that you can leave us with, or maybe that you would have given to your younger self.
Just keep going. Just keep pushing through. Just keep pushing. I don't 100% believe that if you have a good idea and keep trying, you'll always get there. But I think more often than not, you will. I've lost a little bit of faith since I was learning figure skating jumps, but I do think you just have to keep pushing and keep trying. And when there's a will, there's usually a way. You may have to give up a little bit more, but any young woman who wants advice, wants help, can always email me. I'm always happy to take the time. But if you keep trying, you can eventually make it happen. There's this amazing young woman who started a venture fund out of Nashville. And I mean, if you want to see grit, just talk to her. She's truly incredible. And just has, raised fund one, kept pushing for fund two. She's had some setbacks along the way, but you see that and you realize that it is possible and it can work and you can get there.
Well, that's wonderful. And having watched some figure skating, I know that when you fall, it really hurts. But there is a necessity to get up with a smile on your face. And I think that to me is the epitome of resilience. And as you said, grit. And you too are a model of that in our industry. So thank you so much for coming here and sharing your insights with us.
Of course. Thank you for having me.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.